Hey everyone, Sam here. Let's get started. Good to see everyone. So today's session of supply demand zones that work, we're going to get to some of those zones in just a few minutes. Wanted to start with oops, there we go. Whoop, give me 1 second. And let me just make sure everything's working. All right. All right, let's get started. There we go. So you can see the screen, historical stock market returns. Want to start with this topic real quick. Now, the most important thing about this topic is supply and demand. The supply and demand zones, our structural location analysis, all that is really trumps all of this, right? The primary decision maker is the supply and demand scenario or opportunity, not what's happened over the past 50 years, 60% of the time. Does that make sense? Okay. So let me just get that out there to make sure this information never comes before the supply and demand zones, right? However, knowing that, let me give you an example here. And we have tons of this data and we do incorporate it into what we do. But knowing that September is historically the most bearish month of the year, this year was no exception. And let's say September, the stock market is coming down into a demand zone with a significant supply zone above, right? Going into October, then November, which is November and is one of the most bullish months of the year, right? Maybe that's where instead of just taking your normal position, we're comfortable adding on more risk in the form of some other stocks, for example, or not more risk than we're comfortable taking on. But I think you follow me because it's so things like that can help us arrive on higher probability opportunities, right? So it's not one or the other, it's combining both. Does that make sense? Okay. Or what if in August, for example, the stock market has rallied into a supply zone with a big profit zone below? We know the stock market is designed to go up over time, right? I've done YouTube sessions on that, and we can do those again. But that would be a higher probability time to put on a bearish position, knowing that you're coming into supply, large profit zone below, and entering the most bearish month of the year historically. Does that make sense? Okay. All right. Let's keep going. So again, another session of supply and demand zones that work. And these are meant to be very quick, 5 to 15-minute sessions, just to add another little nugget each day on from the original supply demand strategy. And remember, the Pinnacle Institute is not an investment advisor. I am a licensed fund manager. Also remember, there's no guarantee of success when it comes to trading and investing. In fact, available research does suggest that most active traders lose money. So take your time, move slow at this, make sure it's for you, make sure you understand risk, make sure you're okay with risk before you get involved with any trading and investing, right? Okay. So we've looked at this screenshot. This is the Dow, just about I don't know, a couple weeks ago, coming into supply with a large profit zone to the downside, right? These are all out of our live trading and analysis sessions, by the way, with our members. So we looked at this, but I want to carry this forward, right? So the Dow declines from supply here, hits the supply zone, competition to sell, pushes price all the way down through the profit zone, right? Then just last Friday into this week, right? The Dow came down into a very high probability demand zone. That's why it's yellow. Notice the difference in color, gray versus yellow. We color code our supply demand zones based on probability. Price turned, gapped up this week, and rallied so far, right? This is this week. This is last, I believe, Friday into this week now. So falling from the supply zones above, right? Now turning higher at the demand zone below. Now today, okay, literally today in the market, right? Yesterday here, we came into a new, so after that turn down here at the 324, 325 area, that was down here. We then moved higher and created two new demand zones, right? Right here. I know it's hard to see over here. This is from our session yesterday. All right, so this is yesterday before the open. We were going over double demand zones here, meaning two demand zones on top of each other, right? With a decent initial profit zone above, okay? And sure enough, as the day got going yesterday, right, price came down to the demand zone. Double demand zones are higher probability than single demand zones, of course. Anyway, competition to buy at demand, which was strong, big supply demand imbalance here, causes price to turn right there and pushes it higher. Today prices continued higher simply because there was still a profit zone above. Now you can see 131, 331, 332, 333 up here. That brings us right up to these supply areas right here. So what I wanted to share with you again in this is that, again, if you look over the past couple weeks, the Dow has just moved from supply down to demand and rallied, creating a new demand zone during that rally, pulling back to that demand zone, and then rallying some more up through the available profit zone. All of this is supply and demand at work, right? Keeping all biases out of the equation. Whatever we think about the economy, stocks, the stuff going on in the Middle East, the stuff going on in Ukraine, all this other stuff, when it comes to what we're doing here and what you see on the screen, none of that stuff matters. Now, when I say that, I'm not at all saying that stuff is not important and doesn't matter. Absolutely it does, right? This is very serious stuff going on. What I'm saying is, as far as our buy and sell decision making and how we apply our supply and demand rules to identify these areas, we're not focused on any other information that are structural location analysis. Does that make sense? Now you might think, well, how can a war not impact this? How can earnings and the Fed not impact this? I didn't say that, right? What you have to understand is any and all influences on price are reflected in price, meaning anyone who's going to make a buy or sell decision based on any and all of that information, it's all reflected right here, right? Based on our rules, this zone right here, these two demand zones with the rally tell us that demand likely exceeds supply here based on our rules. Why did more people want to buy here than sell? I don't know. And I don't care. It's irrelevant, right? All the people who were buying here for whatever reason they were buying, there were more on the buy side than the sell side. Demand exceeded supply. That's what the chart is telling us. Okay? The why people are buying or why people are selling or wanting to buy or wanting to sell, that is irrelevant. It's not a part of the strategy. Does that make sense? Again, any and all influences on price are reflected in price, and that's what's important. Anyway, just wanted to show how, nothing that happens in these markets is an accident. There's no randomness in any of this. It's all buy orders and sell orders, period. This is exactly how it was when I was on the trading floor back in the 90s with paper buy orders and paper sell orders in front of me. You see price moving from one stack of orders to the next until one of those sides is gone. Price then moves to the next stack of orders and so on. This is how it works. Hopefully that was helpful, and we'll see you tomorrow. By the way, the sources for these two screenshots you see here, I believe we posted those. The team posted those on YouTube. I forget what they are at the minute, but they're posted, the sources for those. Anyway, have a great rest of your day, and we'll see you tomorrow.